Hello traders, how are you? Bonjour Bishangi here from Forex Exploits Online Academy. On today's session, we'll be talking about quarter points. This is a topic that I've written about on the price action book, which is ebook 4. On chapter 9, that's where you get information on quarter points. But on this video, I'll try and talk about as much as I can. Now, what are quarter points and what are the different types of quarter points we have? Now, in this market, when we say the market has pushed a full swing or a full cycle, it pushes about 1,000 pips. Now, that 1,000 pips is what gives us a major quarter point. Now, the market does not move in a straight line, meaning it will not move the 1,000 pips at a go, but it will do that in pushes of 250 pips. So you may find that as a move before any retracement could push up to 250 pips. Now, this is dependent with the tradable item. So this is not cast on stone, meaning not all tradable items will push the 250 at a go, and others will even push more. But at the end of the day, all points added up must move to 1,000 pips. Now we have what we call major quarter points, which are the whole numbers, and then we have the quarter points, which are now the quarter. They give the quarter figures, like we have a 0.250, which is a 0.0250, 0.0500, and a 0.03750, which is 3/4. Now, what I'm basically doing is I'm ignoring the last number. When you're using the currencies, for you to get a quarter point, ignore the last number. This is what I mean. For this price here, remember these are the price points. So on the price point, you ignore the last digit if you're dealing with a currency. If you're dealing with a tradable item, another tradable item which is not a currency pair, maybe it could be an indices or an exotic. Now you move those to be 2 digits. So you ignore the first 2 digits. For example, if you're talking about, this is what I'm saying, talking about 2.02500. If this is an indices, you expected to ignore the 2 digits to the end, like these 2 current digits. But if it's a currency pair, you ignore 1. Okay, so it will read that 2.0250. But if it's an indices, now you move 2 points. So maybe you get it when we do it practically. So we have the major quarter points and we have the quarter points themselves. Now for the quarter points, when you're reading them online or from write-ups, the writer may ignore the 00. So you find that them just write this tradable item is at the quarter point 1.25. What they've just omitted is the 00, but it's the same thing. So that's why I've written these numbers on this end. So let's get to it. So the first thing you want to do is, of course, to open your chart. So go to File, New Chart. So this is for beginners. If you're a beginner, you know where to start. So pick a currency of your choice. And now you have the green chart. Now with the green chart, you definitely need to change your colors. So right click, choose on properties. When you go to the colors, you need to set, maybe your background can be black or white. Okay, whichever color that you want. Let's use white this time for no particular reason. Then the foreground will be the numbers, these digits that you're seeing here. Which color do you want to have? Now, if your background is white, of course, your foreground cannot be white because you will not see the digits. So, of course, you want a color that shows well on white. So, black would suffice just fine. Then we do away with the grid, which is the squares, set it as none. The bar up and the bar down are now the outline of the candlestick. This is what I'm saying. When you draw a candlestick, let's go back here. When you want to draw a candlestick, these lines here are what I'm calling the outline. Okay, the outline. So when you go to properties and there's the bar up and the bar down, you can just say the outline should be black for both of them. whether it's red or whether it's a sell or a buy. Just make it black. So grid resetting is as none. The bar up, bar down, the outline, let it stay black. Bull candle means buying, so you can give it a green color. Bear candle means selling, give it a red color. You can either be green or a line color of your choice, then click OK. There now, then you change your chart to the candlestick chart. And there you see, you have your green color and the outline or the wicks are black. I hope that's clear. Then now you can change your time frame to whichever time frame. I like my units or my quarter points to be on the daily or anything above, so daily, weekly, or the 4-hour, of which you can still do it on the lower time frame. It's only that they will be very, very close to each other. So the higher time frame, the better, because it gives you more space. All right. So we can go to this chart here. Favorite chart, Euro USD. So now I've shown you how to change your colors. Now we're on the daily. Now let's set our quarter points. Now you want to know where the market is at that particular time. So you can either be from the top side or the bottom side. And as at this time, the market is on the bottom side. So you want to find the closest number or quarter point that you have. Pay attention or remember these numbers and check which is the closest. So we already passed 1.00. We already passed 1.250. We already passed 0.0750, but that is the closest. So you take the horizontal line, draw it anywhere, double click on it, right click, choose horizontal line properties. Now, under the common, you can change the color. So if it's a major quarter point, you can give it any color. Then under parameters, this is where now you change the digit. Okay, so I want a 750. So just click OK. Now you can see where my quarter point is at. Remember, since this is a currency, this is Euro USD, this is a currency pair. So I'm expected to ignore the last digit. Therefore, this quarter point will be 1.0750. So it's a 1 and a 3/4. That is the quarter point at the lowest point there. And then from there, of course, now with the 1 3/4, the next one will be a major quarter point. So you add 250. You're basically adding 250. This will be a major one. So let's give it color black. So we have a 1.1000. Of course, you're ignoring the last number again. So from every quarter point you have, add another 250. That's the drill. So from 1.1, we add 250, which is easy. Double click, right click, horizontal line properties, under parameters, add 250. Now this is not a major one, so we change the color back to blue. There you have it. So you have 1.1250. Ignore the last digit. Now from 1 to 50, we add another 250. So that would be a 1,500. So go to parameters, 1,500. You have 1.1500. Add another 250. So that would be 1.750. 750. Then now we add another 250, therefore that will give us another major quarter point, which will be a 1.2. So since it's a major, we change the color to black. Now can you see? That's how you do your major and in between quarter points. Make sure that you change the colors. If it's a major point, which is 1,000 figure, make sure that the color is different from the other quarters. That way you'll be seeing your points correctly. So this is not a major, so we have a 250. All you usually do is just add 250 to every previous number that you have. Okay. Now let's minimize that chart and see how the market has been behaving. Let's do a final one up here, which will be a 0.2500. Yeah, so we have a 1.2500. Now let's minimize our chart and see how the market has been respecting those. Something else, when you're doing your quarter points, make sure that you uncheck, okay, you unselect your lines so that they don't move. So double click on them so that these dots can disappear. If you leave them there, then you just scroll, you may find that you're misplacing your line. So make sure that you've not selected any of them. Now look at this currency here. So it started from a 0.07500. Okay, moved the first 250. What was the reaction on that? It broke to the top side. There was some retracement, but it moved to the top side. Another, this is a 250, 250, 500. So you can see there's some tendency with this currency to push exactly 500 pips before a retracement. 500 pips before a retracement, 500 pips before a retracement. Can you see that? And even when it's a retracement, it's 500 pips before pushing down, 500 pips, 500 pips before a break, 500 pips before a break, 500 pips, and now the market is back at the exact quarter point. Can you see that? I hope that's clear, or I hope you can see it. Okay, so depending with the currency, and this is why backtesting is very, very important. Depending with the currency that you're working on, now you can actually tell how much that pair or that tradable item will move. Okay, for example, if you've been backtesting with Euro USD, and if you've seen that this is what happened at this exact quarter point, what would you be looking for? It can either exactly turn or do some trapping or do some stop hunt, then push the next 500, and it will basically be repeating this move. Alternatively, it can just break to the bottom side and continue 500 pips, 500 pips, 500 pips. Okay, so that is how you backtest and tell how your tradable item moves. Now that is Euro USD. Let's do a currency that does not have a 1,000 figure, or maybe is less than a 1,000 figure. So let's do USD CHF. You can see that this pair here, or this tradable item, on the price point, it has so many 0.0.0 points, right? But it still works the same way. So what do we do first? We need to find a major quarter point. Always start with the major quarter point. That way it will guide you. Okay, so you're going to start with a 1 point. You have a 1 point, 1,000. So the next quarter point, now we want to subtract 250. Therefore, it will be a point. Oh, that's not a major, so we set the color blue. That will be 9,750. Okay, now from 9,750, another 250. So that would be 9,500. Okay, another 250. That would be 9,250. And I hope you can see that if you ignore the last number, it's giving you 250, 500, 750. Then from there, we have a major point. Major point, so we give it a black color. That major point will be 0.9. So from here to here, these are 1,000 pips. So we have a 250, 500, 750, and 1,000. Then we can have another one below here. So that would be 8,750, and that's not a major, so we give it color blue. Okay, we have that. And up here, we can add another 250. So that would be 1.250. 0.0250. You see that? So now let's check what this trade currency has been doing. Oops, sorry. Now you see what I was saying. You need to make sure that you unselect and select your lines so that you don't mess with them. So double click on them so that those circles or dots can disappear. That way you can move them. I've messed on this one. So make sure that you don't leave them with the highlights. Otherwise, you're going to move them around. Now, when they are like this, even if you click on them or move your chart, you will not mess with them. Okay, they're there. And then, unless you manually delete them, they will not be touched, or they stay on your chart. Now, let's minimize our chart so that you can see this. Now, look at this part here. We had this high that was at 1.250. The market pushed 500 pips, retested for 250, pushed another 750, 250, 500, 750. Went back 500 and something, retested back another 750. Can you see that? Then there was a trapping for a whole 250, then pushed 250 and it change direction. Now, this is what I want you to learn. And people who trade Wyckoff, I think this is your thing here. Just to mention, I'm not saying that everybody will make success if they trade Wyckoff, but this is what this is very major for people who trade that. The first move is lower than the second move. This was 500. We have 750. We have another 750. But look at the last one. It's just 250. So now minimizing, or when the move is becoming lower, or the prices or the move is smaller than the previous one, is one sign of a reversal. That's a major thing in Wyckoff strategy. That when the move is lower than the previous moves, they usually call them the waves. When the waves are lower, or when the price pushed is lower than the previous push, then now that's a sign of reversal. That is very true even when you're trading the quarter points. But of course, it will not hold if you're trading BTMM. Now that will be different, because with BTMM, level 3 is usually the highest. So it all depends with the strategy that you're using. But if you're going to use quarter points for your entries, note that when your last move becomes smaller than the previous move, then you're eyeing a reversal. Now let's talk about how to use these quarter points. Now you're on the 4-hour. Let's go back to our favorite pair, which is Euro USD. Then go to the 4-hour chart. Note, even if you go to the lower time frame, or whichever time frame your quarter points will still be there. Okay, so we have, how do you get out? How do you use your quarter points? Now, if the market, look at this part here. If the market goes to a quarter point but doesn't break it, you see, this was manipulation, this was a gap. So basically this candlestick closed below and we're on a selling cycle. This is one thing to tell you that we are not ready for reversal. We are not ready for reversal because the other candlestick from the next day did not close above that quarter point. So this is a continuation signal. When it's ranging around your quarter point, you do not get into that trade. What you do, you wait to see if any counter move will break the quarter point to the top side. If it doesn't, then if it rejects or doesn't get to the quarter point and gives you some significant, maybe rejection of a block, you can see this is rejecting from this imbalance, or hitting out of any the grab of the liquidity, anything, or this can also be the coat of wood, depending on the strategy that you're working on, or this could be the third touch of a trend line. Then you know that you're pushing the same cycle, and this will be a very heavy trade. Alternatively, you can also use quarter point entry, do the break and retest. You can see the market broke to the bottom side, retested a bit, and continued to the. So your quarter point should be an entry and exit point. That is basically what I'm trying to say, that you use your quarter points for entry and exit. Also, your quarter points can also act as your resistance and support zone. So can also be your pivots, or can also be your blocks. What am I saying? Look at this part here. This was a demand quarter point or a demand zone. You always look to the left, okay? When you look to the left, you are always correct. Why? Because the market is a repetition of older moves. So you look to the left. If you're on this part, you look to the left. This was a demand zone. This demand zone was broken to become a supply zone that never held, actually. So the market broke to the top side. So what would you expect if the market retested that? You would expect, of course, a greater move to the top side. Same thing here. This is a supply zone, or you may call it, where is it? Okay. So this is a supply zone, was rejected but never broken to the top side but never held, was broken to the bottom side by a significant candlestick. The retest, now you know the move will be very heavy to the bottom side. So you use your quarter points for entry or exit. But for me, how I usually like using my quarter points are basically to understand the move or the number of pips to anticipate a currency or a tradable item to push. So go to your daily, go to your weekly. The quarter points will be very, very helpful if you set them on the daily time frame or the weekly time frame. That way, if the move starts, you know you have 500 pips to move, you have 250 pips to move, or you have 750 pips to move between 1,000 and another 1,000. So I hope that is clear. If anything is not clear, you can always get ebook 4 and read more on quarter points. Otherwise, remember, you can always send your request, your video request and feedback, either on the YouTube channel, where you should be kind to watch the other videos, give us feedback, and request new videos, and also subscribe and share with your trading community. But you can go to Forex Exploits Online Academy page on Facebook. You can message us there or send us a WhatsApp. And if you're not on Facebook, you can go to LinkedIn, same name, Forex Exploits Online Academy, send us a message. Otherwise, we're looking forward to learning more from you and also getting to interact with you. From me, Wanjiru Gishangi, until the next video, I wish you the very best. Bye-bye.